Well, it's been almost 16 years since CNBC-TV18 has brought the viewer face-to-face with the gurus of investing who share their views and predictions for the way ahead. And today as well, we have a stellar lineup of the who's who of Indian markets and global markets. 16 years ago, an audacious young team bet on India. We believed in its economic potential. We believed in its entrepreneurship. We believed in opportunity. But we were also mindful of the constraints and challenges. We made understanding business our business. We demystified the market and made equities accessible. Hello and welcome to the CNBC-TV18 special. We're here at the CNBC-TV18 Investor Summit, India's biggest investor forum. Today, on this show and on this stage, we had a whole host of market experts, some of the most influential opinion makers join us to talk about India, emerging markets, and the road ahead. A man who understands emerging markets and has been tracking this story for over 40 years now, Mark Mobius, gracing the CNBC-TV18 Investor Summit. He likes India. In fact, he prefers it to China, and he believes that India will outperform China over the next 20 years. Here's the Mobius mantra.
First of all, India is starting from a low base, a much lower base than China. So the percentage increases are easier from a low base. This is a problem that China is facing. It's still a huge, now such a huge economy, very difficult for big increases. That's number one. Number two, the cell phone, the smartphone, is pushing government in India to move faster because people now know what's going on. They have a very good idea of any problems, and they're able to demonstrate very quickly to the government that they're happy or unhappy. So this feedback mechanism is having a very big impact on India. And India is different in the sense from China, in the sense that China is a planned economy. The government, of course, tries to do the best for the people, but it's a top-down approach. In India, the central government may think that it has a top-down approach, but it doesn't. It must rely on the incentives of the population of the various states. And now the environment is very conducive to change at that level because of this communications revolution that we're seeing. So that's another reason why we see India moving very quickly.
So what would be the triggers as far as fund flows into emerging markets are concerned? Because even at 4%, as you pointed out, which is the outlook that the IMF has for emerging markets, we're still doing better than developed markets. As per your slide, valuations are not looking particularly stretched at this point in time. What would be the triggers then for fund flows into emerging markets?
One trigger, of course, is the announcement by the Fed. Because right now, the uncertainty is what's killing the markets, generally speaking. People are just afraid to do anything. They're moving money into US dollars, and they're waiting. Once that takes place, then you will see money flowing back in, I believe. And that would be one trigger. The other trigger will be the realization that these countries are still growing at a tremendous pace. So you're going to see reason coming into play again.
You spoke about some disappointment over the pace of reforms, whether the Prime Minister has been able to deliver on the promise that he held out when they came to office and so on and so forth. You know, as a long-term India watcher, as a long-term India investor, how would you truly assess the performance over the last 18 months?
Over the last 18 months,
of this government?
I think it's been outstanding when you look at it. I mean, if you look at emerging markets generally, India has been a standout in terms of performance. Performance has not been that great, but it's been a heck of a lot better than all the other markets, almost without exception. Okay,
let me throw this open to our audience here, and we've got Anuj and Rima with their microphones ready.
Thank you for coming out here. But do you feel when you come to India for so many years that we actually have in India a right-wing ideology? You know, someone who actually believes in free markets, privatizations, you know, private ownership? Or are we just, between the Congress and the BJP, struggling between Tweedledum and Tweedledee? They both basically cut from the same cloth.
That's a very good analysis, a good insight that you've had there, because you're absolutely right. It's very similar to the Republican Democratic Party in the U.S. They both want federalism. They both want a strong central government. And the same thing is true here in India. You know, people sitting in Delhi, New Delhi, want to have the power in their hands. I think there's a growing realization by Mr. Modi that he's got to cater to the states and maybe allow the states to do more on their own. And instead of forcing them to do something, maybe persuade them and incentivize them to do things that he wants to do, such as let's look at the efficiency of doing business in the different states and compare how one does against the other, that sort of thing. So I think that is a path that is going to pay off going forward. Because I don't think the central government is capable of making the changes that need, all of the changes that need to be made. It really has to be done to a great extent with the states.
What are the lessons you'll give other people managing other people's money? How do you handle when markets go crazy like they did in 2000 or 2007?
The best way to handle that is to go on vacation. No, I mean, one of the things that we learned, and my colleagues here will confirm this from our mentor, Sir John Templeton, is that he was always emphasizing the long term. He always would say, look, you have to take a long-term view. Don't worry about the short-term performance. If we are doing the right thing, if we're doing our homework, and we're trying our best over the long term, we will do fine. As fund managers, we all have to convey that message to clients. It's good for the clients, and it's good for us.
How many vacations a year for you? Zero?
No, what I do is as I travel, I take some short vacations, but I don't take long vacations.
In the years when the NAVs of some of your large funds are down, say 20-25%, how do you celebrate your Christmas? Does it still feel good?
Usually when the funds are down, I'm not sad or worried. It's a very strange phenomenon. Maybe I should be. But I usually think about what's next. And it usually, I hate to say this, but I'm usually rather happy because it means that there's a good chance of us recovering. You know what I mean? We can now buy things a lot cheaper than we had before. The downturns really don't make me sad. It's when things are going up too fast. That's when I begin to worry.
In this age, it is said that the life of a fund manager is limited. But when we see you, it gives us a lot of inspiration that there is still life. So what is the secret behind that?
You have to remember the world belongs to optimists. You have to be optimistic. Otherwise, we're not going to be living very long, and we're not going to be too happy. You know, a big part of health has to do with your psychological makeup.
So what gives you that hope to get into work every morning and to believe that it's going to get better?
Well, I think, one of the beauties of being old is that you see what came before you. And what I see is tremendous improvements. I mean, think about it. In my lifetime, I remember sitting at MIT doing my thesis on a Selectric typewriter. Remember the Selectric typewriter? I talked to some of my analysts. They don't remember what is that. What is that? What's a typewriter? I sent my brother has a farm in upstate New York. He has a horse farm. And they have to go around the farm rounding up these horses. And I bought him a drone so he could see where everything was going. He wrote back to me, he said, "Thank you very much. Now I'm looking for a 12-year-old kid to tell me how to use it." This is the improvement that you've seen.
Well, Mark Mobius, we could continue this conversation, but unfortunately we're out of time, so let me end by asking you to share with us your life mantra.
Be happy, be lucky.
That's a good one. Thank you very much for joining us here at the CNBC-TV18 Investor Summit. Appreciate it. Time for us to take a break here on the CNBC-TV18 special as we bring you the highlights of the Investor Summit. Top FIIs talking about the road ahead for India and what 2016 will look like. Take a look.
We are in a low return world. Growth is hard to come by. The world is struggling with disinflation.
Our base case is that emerging markets will deliver returns of about 10% this year, and it would be even marginally higher.
Emerging markets will still deliver positive returns, but possibly much lower than developed markets.
Consumers of commodity, which is China and India, are going to outperform quite significantly as compared to the commodity producer countries.